Hey everyone, hope you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it together, generally related to three different topics: wealth building, commodities, and/or financial topics. Let's dive in, take a look, see what is going on today. If you want to follow me, it's at _finance. And if you want to join our community, finding-value.com, where I dive deeper into all these topics and subjects, looking for potential investment opportunities and sharing it with everyone in the community. We do have a special coupon code that is active. Special is the code. You get 50% off the first month only on a monthly membership, and a larger discount on the yearly membership. We've got Q&A sessions, question and answer sessions on the weekends through Zoom, so you can interact with me directly. You can send me questions beforehand that I'll get to and answer throughout the Q&A session. And we have midweek updates during Wednesdays during the middle of the week. So momentum structural analysis. I love the constant doubt all the way up. This is Michael Oliver. You probably can't have a bull market without it. This post was from May 14th. Silver made a slightly lower low the next day and has done nothing but go up since. Why are so many trying to get cute with a bull market? So if you did this and deployed your money elsewhere, then you missed the next 10% upside in silver. And now the breakout above the March highs. And also a bunch of huge moves in mining stocks. I don't know. There's times to trade short-term swings, and then there's times to just sit tight and let the market do its thing. And Golden Toilet said metals are clearly correcting now down into a cycle low. That was May 14th. Let them correct, deploy capital into other trending markets. Another fat pitch will come in a few months for gold. Be ready to swing for the fences. Be careful. Be careful. When silver goes and it breaks, sometimes you don't get a pullback. You might go $10 or $20 before you get a good pullback. So timing the short term can be incredibly difficult. What I'm going to say is we are in a bull market. The worst thing you can do in a beginning of a very large bull market is lose your position. Go read Jesse Livermore. Get familiar with that book, Reminiscences of a Stock Operator. Figure out where his weaknesses were. Figure out what he learned as he became a more experienced trader. As he became more experienced, he knew he would talk with the old guy, Mr. Partridge, about losing a position in a bull market, and that's something you don't want to do. We're in it right now. We're in a bull market. What are you doing trying to trade in a gigantic bull market that is developing here? I don't get it, guys. I don't get it. I sit and all the money's made in sitting. I don't think that you can trade and make more money in this market than just sitting. And I know I may be a little bit early in some other sectors, but it's going to be the same for the other sectors. When these things start to go, the big move is where the big money is made. It's not these small little movements that people are trying to time in the short term. At their height, super majors commanded roughly 55% of global oil production. What an era. And that peaked, that production peaked in 1970. That was the American peak oil of conventional oil. That has declined, and we went and grew production throughout the world. Right now, we're at about 10% of world production for these integrated oil super major companies. So it's obviously has fallen quite a bit from the big boys, the Exxon Mobils, the Chevrons, the BPs, the Shells, and so forth. Christine Guerrero says coal-fired power generation is growing faster than natural gas. I discussed how gas turbine inflation was weighing down natural gas outlooks on Wall Street for Main Street yesterday. The new coal and natural gas generation looking forward, you can see that coal doing quite well. It looks like to me, China's share, got it. The coal's the light one, the light blue. Natural gas is the dark blue. And right now, coal over in China is really turning it on there. So I like both. I like natural gas and I like coal equally. And I think that they are both highly leveraged for the bull market that we're in, and all of the demand that's coming out in the future is insane. Absolutely insane how much electricity demand is out in the future. Christine Guerrero, another one from her. She says global upstream oil and gas investment is set to decline 4% in 2025. Cost adjusted upstream activity is down 8% globally. U.S. shale investment to drop 10%. Macro is strengthening towards production supply decline. That's where you get the big moves in oil. So if the macro starts to strengthen and we've got this weakening of production supply at the same time, this is where the moves can become explosive. Upstream oil investment is set to fall for the first time since 2020. And this is your share of reductions in investment after oil price drop, exploration, U.S. tight oil, new fields, and existing fields. And we're down about 10%. Bitcoin for freedom is hit. So this is Trump's plan, according to him. He says buy billions in Bitcoin, remove the debt ceiling, print trillions of dollars, see the Bitcoin price smash 1 million. I'm in the camp that I'd rather be in the physical metals out of the system. That's me. I'd rather be in platinum, silver, and gold, maybe some palladium even. I'm not a believer in the Bitcoin. Sorry. I get it. It's gone up a lot. Price doesn't mean, just because price goes up doesn't mean it is the best. There are things that you should look at outside of price, like why is it going up? What is it correlated to? Is it correlated to tech stocks that could go down in a very high inflationary period? Yes, it could. And we don't know what the true value of Bitcoin really is. We don't have much data on it. So I'm not in the camp that it's an inflation hedge. I don't know what it is. And I'd rather go with the proven out of the system too. You can get stuck in this stuff. They can block you in. They can take away the on ramps and off ramps in and out of Bitcoin if they want. So yeah, that's what I'll say there. Joy of compounding. One of the best hacks in the investment field is learning to be happy doing nothing. That's how you make a lot of money. It's all in the sitting and doing nothing. A lot of people they look at investing like it's a job where you go in and you do something. No, that's not how you make money. Find good companies, you buy them when they're cheap, and then you just do nothing for a long time. That's it. I might be in these companies for 10 years, guys, maybe longer. And that's the way that I view it. What am I buying? Why is this a good company? Are they buying back shares? Are they paying a dividend? Are they potentially going to pay a dividend out in the future? How big is that dividend going to be? I think about all that stuff before I buy it. A lot of people, they'll just buy something because it's going up. They have no idea about the company. They don't know what the strategies and the growth strategies are. They don't know what they're going to do with the cash, if they even are making cash. I try to think about all that stuff. False breakdown to slingshot at some point here. This is for oil divided by gold. Lots of sectors looking solid outside of gold, like platinum, copper, and others. Oil will move with these sectors, in my opinion, with some time. So we've got a falling wedge, slingshot number one, bam. Another falling wedge, slingshot number two is being developed. Shoulder, head, shoulder. And we also have on the short term of oil an inverted shoulder, head, shoulder as well. So if you zoom in, there's your falling wedge. It is downward facing. We've done a false breakdown, which is a slingshot number two, ready to rip higher for oil. You zoom in again, you can see the bull flag that is developing here where we could launch higher for crude oil to outperform gold. I think that's a good likely case, and one that I'm watching. So yeah, I think that's a potential possibility for oil to outperform gold at some point here. Not doing it yet, but I think it will. And there's other sectors like copper breaking out to the upside, fertilizers are going up. There's other things that are bottoming too. These are all inflation sensitive assets and the economy too. So I don't think those will go up and crude oil is going to stay down and those will just continue to go up. I just don't see that happening. I think they're all going to move together. Here's one source. Saudi Arabia's surprising oil stance could signal lasting price change. It's possible that the oil price will never rally, as some expect with energy demand, geopolitics changing so much. We will never see $70 again in our lifetimes. It's amazing how few understand how over it all is. Oh my gosh, I love this, guys. This is exactly what they were coming out with and were saying about oil when oil went to 120 from like 10, $20 barrel back in 2020. It's the same crap. And I don't know why they have this stuff come out. I don't know, Q 2.0, I can't believe they're saying this, but yeah, we're gonna blow through 70 like it's hotcakes whenever we get going. We're not getting going yet. When it does get going, we'll blow through it. Now, it might take some time. It might take 6 months. It might take 3 months. It might take a year. We don't know. It might take 1 month. Who knows? The timing, we don't know when exactly it will happen. We've got positive signals, inverted shoulder, head, shoulder on the crude oil to gold ratio, on crude oil itself priced in dollars. And a lot of this is driven by the value of the dollar. The value of the dollar drops out. That's what's going to push everything higher. Commodity bull markets are the denominator going down. It's the dollar going down. It's not supply and demand. Well, you could say technically it's supply and demand. It is the supply of dollars rolling into the system, and that supply is your demand for commodities. If you want to look at it from that perspective. Oil on a breakout watch, target $70. There's your shoulder, head, shoulder that's inverted, ready to potentially break at any second here. So that's one to watch. That's an end of trend move. These inverted shoulder, head, shoulders, end of trend. So some people will say, well, what if we get a recession? That's not what it is saying. You can't. So what happens a lot of the time is you get these charts where people are positioning. They are generally larger, bigger money because they're impacting the charts in a way. And then people will argue with the charts. They'll be like, well, what if a recession comes? You're not you're not taking the data and pairing it with what we're seeing in the charts. If all the charts, if copper's breaking to the upside, platinum's breaking to the upside, if silver's ready to break its big cup and handle, that is not a recession. A recession, the positioning of big money is telling you that no recession is coming, that we are coming out of a recession potentially. And the hardest thing for most people to understand is you cannot look at news. News is late. News is an extension of the sentiment. You can't use that. So when you look at the markets, you have to see positioning by big money and what they are kind of doing. You can also pair that up with negative sentiment. So the bottom will be created when you have negative sentiment and big money starts to accumulate. That's the bottom. They're not going to tell you that they're accumulating. The news will not know. They're going to be bearish at bottoms and bullish at tops. Smart money, the one that's moving a lot of money, creates these bottoms. So oil is most likely bottoming here. I am very bullish on it, and we're using patterns to determine that. We're not using news. News is always late and it won't work. So then you kind of have to like change your entire paradigm of how you view the markets because you can't use basically anything from someone else. So I created the three pillars. The three pillars are ratios, technical analysis, and cycles. And I also use fundamental analysis to determine my companies that I really want to go into and my position sizing in them. You can't, you have to come up with ways, like notice the three pillars. None of it is news, none of it is opinions or analysts. Those are all garbage. All garbage. So it's where is what's cheap? How do I identify what's cheap? That's the ratios. The technical analysis is a way to see how people are positioning in the market, and is there patterns that are repeating to other bottoms, like this inverted shoulder head shoulder here. And then the market cycles, that is where you can tell if you've got the tailwinds at your back the entire time. And if you're looking at cycles, you can also say, you know what, I think the cycle's shifting and changing. One of the big cycles that's at our back now for commodities is an increasing interest rate environment. That's one of the longer term cycles that I look for. There's other shorter cycles too that I also look for. Because I'm wondering if, when happening, silver, platinum, gold run massively higher, what impact does that have on the banks who are short the paper markets of these metals? Are we going to see them go bankrupt if we get big moves in platinum, silver, and gold? Those are the three most shorted commodities, and they are heavily short. Curious to see how they are handling these big moves in those metals. Here's Peter Lynch on the key skill for 150 bagger. So let's read through this entire thing real quick. And this is Peter Lynch on the skill for 150 bagger. It says, my candidate for the world's greatest amateur investor is Charles Silk. Charlie bought Blockbuster many splits ago in 1984 for $3 a share. It wasn't called Blockbuster yet. It was called Cook Data Services, which fit into Charlie's area of expertise. The shares he bought for $3 a piece are worth $450 today, 1994. So his $10,000 investment became a living in itself, thanks to this one exciting stock. He was able to abandon telemarketing and devote himself to his favorite hobby, looking for more exciting stocks. He and two of his three sons are now full-time stock pickers. I've often said that a couple five baggers every decade is enough to make do-it-yourself investing a worthwhile pastime. With a 150 bagger like Cook Data, one every half century or so is all anybody needs. Call Charlie a lucky man for stumbling onto Cook Data Services, but luck didn't make him a millionaire. The hard part was holding onto the stock long enough to get the full benefit. After the price had doubled and then tripled, he didn't say to himself, I'll take my profits and run, like many investors who invent arbitrary rules for when to sell. He wasn't scared out when the price dropped, as it did several times, and he ignored the highly publicized negative comments made by forecasters and experts who knew less about Blockbuster than he did. He had the discipline to hold as long as the fundamentals of the company were favorable. It was not a guess on his part. He was doing his homework all along. That's exactly what I'm doing. I am doing exactly what he's doing. And guess what? I think it's possible that I might get 3 or 450 baggers in my portfolio because I was lucky enough to buy the bottom of 2020, and I am continuing to hold those shares. They're almost all in oil and gas, energy service. I might get a couple uranium ones that do 30, 40, 50, 60 times my money. I might have over 10 to 20 companies in my portfolio that could eventually end up being 100 bagger plus. And in the short term, I have to ride through volatility. I have to ride through some of them. I mistimed my entry point. I might be down 30, 40, 50% on my timing when I purchased it when it was down 60, 70% from its highs. How do I know? And why am I holding these companies? A lot of people say, well, what are you going to sell? What are you going to sell? Guys, we're at the beginning of this bull market. I don't think you understand the potential of this bull market that is coming. And if you're asking, like, if you're going to sell something right now, I don't think you understand what's coming. It's going to be jacked. I think we're going to see a massive devaluation of the dollar, a big devaluation. And that's going to push hard assets and commodity stocks way higher. Way, 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 way higher. Way higher than what you can imagine right now. If you're asking, should I sell my 300 or 400% stock bets up? And I know there might be other better options out there, but we'll see. I'll answer your guys' questions as we go. But guys, this is coming. And the patterns I'm seeing are humongous. All of them. Silver, 45-year cup and handle, the 13-year cup and handle on gold. What about the inverted shoulder head shoulders on all the energy and energy service companies that we're seeing, or double bottoms? About rare earth metals and lithium, all those sectors and fertilizers. I can see it everywhere. There is no, this is not by just sheer happenstance that we're seeing bottoming patterns across all of the commodities complex. I also have done a ratio analysis. A ratio analysis looking at what sectors will go up the most for this commodity bull market. And I'm still refining my entry points. I'm still refining and getting better at understanding Elliott wave and other things. So, yes, this is what it takes for 150 bagger. And he got one of them. I have a feeling that I can do it with maybe 20 of them. It's possible. It's possible. You got to hold long, guys. You got to hold long. So here's another one, and this is crazy to think about here. Copper to gold ratio could be epic. I know everyone is so gung ho on gold. Look what we have here. This is a falling wedge into a corner for copper, and we're right at the bottom. We could see a big move up in copper here to the upside of this ratio. So gold's our leader. Gold has led. Copper's broken out on its dollar term. I think I've got here. There's copper breaking higher here. Can you imagine what's going to happen if this were to outperform going all the way up? Copper is going to be massively more expensive. Now, think about the ramifications of this. Why would copper go up so much against gold? I'm just going to say this, guys. There are metals in this world that have value for industrial applications. Industry, if we were to get short on copper and it were to tighten up, what is the value of some industrial companies if they can't attain copper? Well, they're going to say we need copper for our design. Now, it will get designed out with time, maybe. That's not a given, but some things will and could get designed out where we use less copper for certain products and materials. I think that time is coming. I think we're going to have to start to look at elements on the periodic table that are going to become more scarce than what most people think. And it's all coming very soon. So I'm loading up in various sectors where it's all coming ahead of us, guys. And oil is going to be a big part of it too, because as oil prices go up, and if oil gets a little bit more scarce, harder to get, more expensive, which it will, and if we do hit peak in shale, it's going to blow the prices of some of these metals to the upside massively. Massively. The cost curves are going to go way up. And that doesn't mean that the equities are going to do that great. It just means that the physical price of these are going to go up massively. That's what I think is coming. Rock bottom entries. Here's platinum, a generational buying opportunity. Like I didn't know that. Yes, of course it is. It's going to be ridiculous. Ridiculous. And platinum is a unique material, very high melting points, scratch resistant. It is a beast. And if artificial intelligence comes along, do you think if they're going to push the design of something, they need exotic materials. Platinum is going to be one heck of a valuable material. Here's the US labor market just hit a wall hard. Only 37,000 private jobs added in May, 110,000 expected. It might be the clearest signal yet a slowdown is underway. Well, maybe we're in the slowdown. And maybe with them printing all this money, it's going to end up being very inflationary. And keep in mind, this is all data looking backwards, not a predictive function. Nick Adams says, shut down the IRS completely and switch to a consumption tax. The tax code is too complex and is rigged against the working class. I don't know if that's the case, but if we were to shut down the IRS completely and put in a consumption tax, that means that every single citizen would pay tax, which I'm for. But the working class, the majority of people who work, do not pay taxes. I think it's the majority. I think it's over 50% do not pay federal income tax. It's real close to 50%. I don't know if it's the majority or slightly under the majority. So maybe it's a 48% or whatever it is. But a lot of people do not pay federal income tax. Zero. Now, if it's a consumption tax, they would pay tax. So you would be increasing your tax base. The people who would get off quite well are the ones that are more wealthy, the top 5%. They pay all the income tax. Brent Futures AM update. Dry bulk, Capesize, Panamax are both up 2%. Tankers, VLCC is up 4%. Suezmax is flat. Brad Hickey says, looks like we finally have a long-awaited breakout in silver this morning. Buckle up. Silver breakouts to the upside typically are crazy and relentless. You might not get that pullback, guys. It can go. I mean, it can go if we get a clean break from 35, 36 area. Bravos Warning says, warning, world debt has now officially crossed 300 trillion, and it still continues to climb aggressively. This is not looking good. World debt in trillions at record high. It doesn't look good. It's the design of our system. It's got to go up. You can't have it go down. So it'll hockey stick because that's the way the fiat currency system is designed to do. You can't have it any other way. And with this money coming in, this record debt, which is money, when that comes into the system, it puts everything into a shortage. That is your, quote, demand. So when it puts it into a shortage, that is AKA inflation. That is what inflation is. It is money coming into the system faster than you can produce goods and services that make up GDP. And you know what makes up GDP? Oil does. And if you grow your debt faster than oil, which I think at this point it's very obvious it will, we're going to see a lot of these things go vertical. And the value of these metals and materials are going to be epic because everybody's going to want things and it's going to get incredibly expensive. And then they're going to want to preserve their purchasing power, which then means that they're going to run at probably physical metals at some point. And again, it's better to be there first, sitting and waiting. It's better to be 5 years too early than 1 day too late. That's the way that I viewed it. And I got in real cheap. I loaded up. I'm ready for this instance here. The ratio chart below is now at the blue gate. The move so far has been very profitable, but fortunes will be made. Do not miss this, and don't mess this up, please. I don't even care if you're part of the website or not, guys. Don't mess this up. GDX versus GLD. We're about to break out of this blue downtrend. It's a 12-year long base. The bigger the base, the higher in space. We had a nice little shakeout in 2016, another shakeout in 2020. It's coming here, guys. It's going to be big. It's going to be hopefully you guys ride it with me on the website. You can hang out on the weekends with me and ask questions. This is not another gold rally. It's a historic revaluation. Gold is returning to its true role, not as a commodity, but as nature's money. The only real money that ever existed. Guys, we're not playing around here. It's going to get real fast. Bank of America clients say gold is the most. We talked about that last time, and obviously it's not overvalued. They don't know what the hell they're talking about. Anyway, give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you like. Specialist coupon code if you'd like to join. We got a Saturday question and answer session coming up this weekend. All right, guys. We'll catch you next time. This is Finding Value.